Good day. Today we'll be focusing on the income statement. So now what is the income statement? So just like the trading account and profits and loss, same with the income statement. The business uses the income statement in order to calculate the profit. Okay, the business uses the income statement in order to calculate the profit. So it is being used to get the net profit of the business. So the business uses the income statement with the purpose of finding the profit. So let's look at the format of the income statement. Here is the format of the income statement. The format. Okay, so the income statement. This is our income statement. So it starts with sales, and then after sales, we have the cost of sales, and then we have the gross profit. Okay, now before we get to the cost of sales and the gross profit, let's come here to the sales. Now, here in sales, when you are doing the income statement, the first thing that you must do is you must take the amount of sales, okay, in the trial balance. Take the balance of the sales in the trial balance, and then you subtract the debtors allowances. Okay, subtract the debtors allowances. That is the first thing that you must do when you're doing an income statement. You must take the sales and then you subtract the cost of sales. Okay, so then after this, you will just go to the adjustments or the information. You check if there's anything that is affecting the sales. So if there's nothing affecting the sales, then you subtract, then you come here and then you get the amount. Okay, then cost of sales, you also check in the adjustment or the information. You check if there's something that is affecting the cost of sales. So if there's something that is affecting the cost of sales, you will have to come here to the cost of sales and take the balance in the trial balance. Then you subtract or you add if the adjustment is saying you must add. Okay, and then after that, the money that you will get, you will write it here. Now, how do we get the gross profit? To get the gross profit, you must say sales minus cost of sales. Then we will get the gross profit. Okay, and then after gross profit, you are going to have the operating incomes. Operating incomes. Okay, so the operating incomes, we can have the rent income, we can have the discount received. So we have many incomes. But then interest income, we do not record the interest here under operating incomes. We do not record the interest. Okay, now, so let's say that we only have these incomes. Okay, you add them up, then when you add them, you're going to get the operating incomes. Okay, and then after that, we are going to have the gross operating incomes. Now, how do we get the gross operating incomes? To get the gross operating income, we must say gross profit plus the operating incomes. Then you are going to get the gross operating incomes. Okay, Now, after the gross operating incomes, we are going to have operating expenses. Operating expenses. So here in the operating expenses, we record all the expenses except for the interest. So the interest, we do not record it here. So we can have the bad debt, we can have the depreciation. So as long as we're going to record all the expenses here, okay, let's just show only these two. Okay, and then we are going to add them up. We add them up, then we are going to get the operating expenses. Now, the operating expenses, we must put them in bracket. As we know that if we want to get the profit, we must say incomes minus expenses. So to show that you are subtracting the operating expenses, we must put them in bracket. And then we are going to have the operating profit. So to get the operating profit, we must say gross operating income minus operating expenses. Gross operating incomes minus operating expenses. Then we're going to get operating profit. Okay, and then after operating profit, we are going to have the interest income. So under interest income, you might have the interest on fixed deposit there, interest on investment, all they all fall under interest income. And then thereafter, we are going to have the profit before interest expense. Okay, interest income. So now to get the profit before interest expense, we must say operating profit plus interest income. Then you get the profit before interest expense. Then after that, we are going to have the interest expense. So under interest expense, we might have interest on loan, or the interest on mortgage bond, or the interest on the bank overdraft. So all those, they are the interest expense. So we must put them in bracket to show that we are subtracting the expenses. And then what you are going to get there is the net profit for the year. This is a profit for the year. So this is your format of the income statement.